So chapter 3 is all about the different source documents that we'll have in accounting, and we'll start by looking at where it fits in terms of theory. So source documents are all about providing reliability, and we learnt in chapter 1 that reliability is defined as making sure things are free of error, opinions and estimates, and they're free of opinions, estimates and errors because we can verify them with a source document. So looking at the part of the definition that's important for this is that how is everything verified? It's verified with a source document. And the documents we'll use to do that are receipts, check butts, invoices, memos, and statements of accounts. So every transaction involving a buyer and a seller produces an original and a copy of the document. So we'll keep it reasonably simple and say the seller gives the original to the buyer, and then the seller gives the copy. So the general rule will be that the person who is receiving the document, in this case the buyer, will always get the original, and the person who's selling is going to issue the document and they'll keep a copy of it. So the rest of the chapter will be spent going through the different types of documents that we'll need to process as we go through the course. So under cash transactions we'll have cash receipts and check butts. For credit transactions, we'll have sales invoices and purchase invoices, and then we'll just have another category that we'll call other. So other odds and ends that we'll need to process could be memos, statements of accounts, orders, and quotes.